Hey everyone, this is Charlie Shrem, and you're listening to Untold Stories. This is a show where we dive deep into the lives and personal histories of some of crypto's most influential leaders and find out how the crypto movement truly came to be. Let's dive in. What an awesome episode we just did with Andy Bromberg, who's the president and founder of Coinless. We covered a lot of topics. This is a conversation that I really wanted to have for a long time because the ICO craze was such a big part of our history. But how do I cover it objectively? You know, do I cover it with someone who ran an ICO? Do I cover it with a regulator? Do I cover it with someone who went to jail for it? Like, who do I talk to? And so talking to Andy was a great idea because Coinless, which spun off from AngelList, was a company that out of 3,500 projects that came to them, they only worked with 8 of them. This is a company that really is good at due diligence. And we talked about what they looked for in a project. And so it's so crazy that when he said that he only worked with 8, we talked about 6 different metrics or axes that they look for. We talked about some crazy stories, how Balaji, who was the CEO of Coinbase, whispered in the ear of Andy and a lot of other Bitcoin and blockchain people that you know today at Sanford in 2012. These were the founders of the Sanford Bitcoin group. I didn't know this. This was such a crazy thing how they all got involved so early on and some of the crazy stories behind that. We talked about like what is an IEO and STO and why Andy is really bearish and doesn't like the idea of like the IEO and some of these negative things. But there's a lot of good that's coming out of the industry as well. We talked about what are the legal structures that work, what are some of the token economics. We talked about some really cool thing about Andy's life, how he got involved in politics right after school and then jumped back into Bitcoin, and some of the people that he met were some really interesting topics. You know, like I asked some questions that I'm trying to get a better answer of. Like, how do you transfer value to the token itself from the company? Like, how do you transfer that value? Why do we see some companies that are so successful, but the token itself is shit? And then how do you incentivize the good? And then how do you disincentivize the bad? We talked about this and so many more topics on today's Untold Stories. Stay with us, and I'll be right back with you right after the ads. How do you actually live your life on crypto? How do you do it? I've been doing it since I first got started with Bitcoin back in, 2011. But since 2016, I've been using the BitPay debit card to spend my Bitcoin on a day-to-day basis. And it's been such a great product that I've been using it for over 3 years. BitPay is now sponsoring Untold Stories, and they're going to be giving away free Visa debit cards to all my listeners. All you have to do is visit bitpay.com/Charlie. It's such an easy card to use. You get the card in the mail, you download the BitPay app, you put Bitcoin on the app, and when you want to send Bitcoin from the app into your debit card, it only takes a few seconds and you can spend your Bitcoin anywhere credit cards are offered. It's really so easy. You almost wonder, why didn't this come out in 2011 when Bitcoin first launched? Well, it was very difficult to do. In fact, I actually tried to launch my own debit card, but I wasn't able to because the credit card companies were very reluctant to do it. But now BitPay launched their product, and a lot of other companies have launched credit cards and debit cards using Bitcoin over the years. I still will only use the BitPay card. I'm very loyal to the brands I like, and I hope you guys are too. The fees are very low. You can use it to withdraw cash at ATMs. You can use it all around the world with very low fees. A lot of companies have tacked on super high fees, and I don't like that. So check it out, bitpay.com/Charlie. That's bitpay.com/Charlie. You get a free card. You don't have to pay for it. Usually the card costs $10 or more. There's a commitment, but you don't have to do that here. It's a free card. There's literally no reason to not try it out. I've been using it for over 3 years. So check it out. I'm super excited to share that we're now working with Bitpanda here at Untold Stories. Bitpanda is a leading European platform for investing in digital assets like Bitcoin and Ethereum. Their core product is an easy-to-use crypto on-ramp and digital asset broker with over 1 million users. How cool is that? You can not only trade crypto like Bitcoin and Ether, but you can also trade digitized gold and around 30 other digital assets. What's amazing about Bitpanda is how easy it is to set up an account within minutes and get going with the minimum amount of just €1. So make sure you check out Bitpanda. They are a sponsor of Untold Stories. I love them, especially if you're in Europe or anywhere in the world. Bitpanda.com. Thank you so much, guys. Over the years, a lot of companies have tried doing crypto social networking. But the problem is that there are a lot of really good social networking apps already out there, like Instagram, Facebook, Snapchat. How do we build a social network that's perfect for crypto? Well, I want to talk about Pepo, our newest sponsor of Untold Stories. Pepo is an amazing social media app that's built for the crypto community. What's really cool about it is that you can get rewarded for uploading and putting out good content, and you can also reward with crypto people who put up content that you really, really like. It's fast and simple, and it's the first crypto-powered app to be approved by the Apple and Google App Stores. You can find me on Pepo right now at Charlie Shrem, the same handle as my Twitter, and I'm going to be posting interviews, travel videos, and more. So make sure you check out Pepo. It's super cool. Pepo.com. Enjoy it. Untold Stories wouldn't be here without the amazing production company Blockworks Group. A few months ago, I approached Blockworks Group and I said, hey guys, I want to do a show, Untold Stories. Can we make it happen? And these guys are the only event and podcast production company that I trust. Really, the show is powered by them, and it wouldn't be here today without the amazing work of the Blockworks Group team. So for access to all the premier digital asset conferences and to check out their other podcasts in their network that they produce, check them out at blockworksgroup.io. That's blockworksgroup.io. I promise you will not be disappointed. Hey everyone, this is Charlie Shrem, and you're listening to Untold Stories. It's so good to be back in the saddle here at the studios in beautiful Florida. I was out for a few weeks traveling around the world, and then I got the sickness, the flu. When I was joking earlier with my guests how, you know, in Florida it changes from 90 degrees every day to like 85 every day, and when that happens, you know, our bodies need some time to get acclimated. But I'm really excited to do this episode, and I want to welcome my guest, Andy Bromberg, who is the founder and CEO of Coinless. Andy, welcome to the show.
Thanks for having me.
So I have to say, I want to preface this because the point of Untold Stories is to talk about any topic and every topic going back from 2010 or 2009 till today, and to document the stories and to really talk about things that people want to hear, but also to talk about things that people don't want to talk about. And I'm going to get flack for even talking about, you know, like, oh, you're an old school OG, blah, blah, blah. You're talking about ICOs. But you know what? This is a very important topic because we can't discount and we can't forget a lot of the good and a lot of the bad that happened from, you know, in the 2016 to even going back until today world. And a lot of people talked about ICOs and shitcoins in a negative light, but there was a lot of good that came out of it. And your company was one of them. And there were a lot of companies that were doing things the right way. And there were a lot of companies and teams and products that were doing things in this market, in this this token world over the past 2-3 years. And they were doing it the right way. And I want to shine a light on that. So I'm really, really excited to have you today. And so what I'd like to do is kind of talk about, I want to talk about, my first question is, and we could talk about what Coinlist is and what it became. But the question I have for you is, you know, when you guys launched in 2017 and you kind of spun off from AngelList, did you foresee the negatives, or did you foresee that things were going to get a little bit too hot and heated in this ICO world? And I don't even like to use the ICO, but did you kind of foresee how things were going to play out?
Yeah, I think you characterized it well, that there's some great things that have happened as a result of this ICO, a token sale, or token proliferation. There's way more. Yeah,
what do you call it? Yeah, I say token generation event. What do you say?
Token sales is usually our term of art.
Okay, cool.
Sales. Yeah, so... But you're right. Most of it was bad. And I think, what we've seen in the last year or so is really the separation of the signal from the noise, and we're going to see that continue. And I think, I don't want to sound prescient here, but when we launched in 2017, we looked at our inbound pipeline right away. There were tons of projects coming to us for help running their token sales, and the vast majority of them were projects that we did not want to work with. And so we looked at that and we said, wow, if this is the state of the industry right now, where a tiny percentage of these projects are ones that we're excited about, yes, this is going to get too hot. Yes, this is all going to come crashing down at some point. And what we're really focused on and remain focused on is sorting out the good from the bad, and then helping those good ones succeed in spite of all of the bad things happening around them, which I think is the biggest challenge.
You were behind some really good ones. So when you said that to yourself, did it get better or worse over the years?
I think it continued to get probably a little bit worse from summer 2017 when we started working on Coinlist through the end of 2017. And then in 2018, it came crashing down pretty meaningfully. And what was interesting is we kept seeing about the same volume of high quality deals coming through, but the volume of low quality deals fell off a cliff. And that happened, I think, pretty quickly in kind of mid 2018 that separation started to happen. I mean, we've seen now, I have to find the most recent number, more than 3,500 inbound token projects.
I'm going to jump around, but I'm going to go back to a lot of these subjects. You said that a lot of high quality projects continued to come and low quality projects eventually died off. Do you think that's a product of the market being efficient and eventually, resolving itself? Or do you think that was a result of regulations, maybe like government scaring people, or was it a combination of both?
I think, it's a couple of things. I think the biggest factor was just investors getting more sophisticated. In 2017, investors didn't.
Okay, that's a good thing. It's a product of the market.
Absolutely. Yeah. But that's not to say that it was just that. And I do think that the regulations made it harder to launch a token project. And so for people that were not putting a ton of effort in and were just trying to get something out there to make a quick buck, the regulatory environment made it less worthwhile to do so.
Very interesting how that played out. So I want to go back to the beginnings, and I want to talk about exactly, because a lot of the listeners are probably Googling you and what you guys do. Start from the beginning, and I know you started. Did you start within a team of AngelList Protocol Labs, and you started to help one project, and then you figured out, hey, this is something that could be potentially beneficial for other projects?
Yeah, pretty close. So Protocol Labs, who build Filecoin and IPFS, among other products, we're getting ready to have the Filecoin token sale, which was going to be a big event. And they started working on basically a platform to run that sale. And midway through the process, they realized they could use some help on the compliance side. And so they called up AngelList. And AngelList obviously is the top startup fundraising platform out there, has done a lot of online fundraising. And so collaborated with Protocol Labs to build this initial platform that became Coinlist. And midway through that process, everyone kind of took a step back and realized, like you said, wow, this is really hard to do one of these token sales. Every single token issuer is going to need this exact same set of services. This seems like a good independent business. And so Coinless spun out from AngelList at the end of 2017. That's the point at which I came over as one of the founders to get this thing off the ground. The other founders had worked at AngelList previously. And we spun out this new independent Coinlist in fall 2017, just about 2 years ago.
It's pretty unknown that you actually got involved in Bitcoin pretty early, though. You were involved in the Sanford Bitcoin group when you were in school, and what was that like? I mean, what is the Sanford Bitcoin group? Yeah,
so the story there is that a number of us took a class called CS 184 Startup Engineering from a professor named Balaji Srinivasan, who most recently was.
Balaji.
Yeah.
Okay, cool.
Yeah. So he was our professor. And this was before he went to Andreessen, before he started earn.com, before he went to Coinbase. And he was teaching this class. And the class was amazing. It was about how to run a startup, how to build a startup from a pretty technical perspective. And one of the elements of the class was that we had these hackathons every Thursday night. And at 6 p.m., you could meet in this building, all the students, and you would work on a project, some sort of product that you wanted to build. And what ended up happening was a small group of us, about 7 of us, every single Thursday stayed there from 6 p.m. Thursday to 6 a.m. on Friday, working on our projects. And Balaji stayed with us. He was there the whole time, hanging out with us and helping us and working on these projects.
What was that like?
It was amazing. I mean, it was just this environment of people that cared about what they were building, working on projects. And I think for a lot of the people there, they had never had that experience before. Coming to Stanford, to this kind of mecca of startups, and having the opportunity to work on something with people that are as passionate about building things was amazing. And so we all, had these Thursday night hackathons, and then the class ended, as classes do. And we all wanted to keep spending time together. So we ended up continuing to meet up and just talk about things and work on things. And one day Balaji said to us, he'd always kind of mentioned Bitcoin, talked about Bitcoin, but said to us, you guys really have to pay attention to Bitcoin. This is going to be a big deal.
What year do you think that is?
This is either very end of 2012 or beginning of 2013.
Do you know what's crazy? How this is how I see what you just described. Here you are in school, and how many people work for Coinless now, do you think? How many people are indirectly or directly are earning income from being involved in Coinless?
30 or so.
Okay, so here you are. This is what I love about this community. I just want to point this out, and I know I'm jumping around, but here you are in school, and Balaji's like putting Bitcoin in your ear, and I love the connections. It's such a crazy connection, and you start the Stanford Bitcoin group, and then fast forward, you end up starting a completely non-crypto company, Sidewire, and I want you to tell me about that. So you go off, you graduate, and you do something non-Bitcoin related, and then you come back to it because you have that in your ear, and now you're providing jobs for 30 people. I mean, that is so... I mean, if that is not pro-social behavior, then I don't know what is.
I'm with you. I mean, I'm so grateful to have heard about this technology at that point because, yeah, it planted the seed. And I've always felt that there were opportunities to be had here. And so, coming in and being part of that founding team at Coinlist.
I mean, that's a crazy story. It's good we're on Untold Stories.
Yeah, exactly. But yeah, just rewinding, Balaji kept saying Bitcoin is going to matter. And so we ended up deciding, hey, the 7 of us and Balaji and Vijay Pandey, who's another professor and also now a partner in Andreessen Horowitz, decided to start the Stanford Bitcoin group. And we formally started it, I think, in 2013. And that was a really exciting time. It was reasonably early in the industry, so it was still a pretty small community. And we worked on building some different products. We worked on some academic research around Bitcoin, and we worked on advocacy. And we, went around and preached the gospel of crypto and tried to pitch people on its future potential. And we did that for a couple of years, and that was a lot of fun. We met a lot of really interesting people, a lot of whom, to your point, are still in the industry today.
Like who?
I think about one person we met super early on, Bill Barheit, founded Abra, was one of the first people we met with as the Stanford Bitcoin group. And he's obviously still in the industry. Dan Elitzer, who's now at IDEO Collab investing, was running the MIT blockchain club at the time. And we got to know him.
Do you want to hear something interesting? So I'm just looking back on my emails. In 2012, we had a meeting at Stanford, and it was me, Jared Kenna, Eric Voorhees, Trace Mayer, Ryan Singer, because Ryan was a member of the Stanford Peace Innovation Lab, and he was like a paid researcher, I think. I don't know what his role was, but this was November 2012, and we actually went to. It was the first time, I went to Stanford, and because I can never get in. I'm one of those kids who was never really book smart in school until I went to college, but. But how crazy is that you were there at the same time, and I was told that this innovation lab was the only really place that Bitcoin was being talked about at the time. But that was a crazy group of people. But Stanford definitely really, really should take credit for having a place in kind of like fueling a lot of the early Bitcoin entrepreneurs. You know, I mean, you look at a lot of the overlap between like Ben Davenport, who founded Bitco, and Facebook over there and everything. A lot of people were like almost like a revolving door at Stanford here, you know?
Yeah, no, I mean, and even that kind of the class that I was in there, a lot of those people are off doing crypto related things now. John Backus and Alan Meyer were in the Stanford Bitcoin group. They founded Bloom.
Oh, wow.
Was in our class too, and he founded Dharma. There's all of these different people that have gone off and are still doing things in crypto at this point, which is really exciting. That
must be really good for you, to be able to do for your Rolodex, but also for relationship and due diligence. So tell me a little bit more about like the services that you guys provide, but more importantly, I want to hear some of the metrics. I want to hear like some of the immediate red flags that you think about that no one ever thinks about. Like, for example, this guy like beats his wife, and because of it, we're not getting involved in his project.
Right. So yeah,
God forbid, like
that would be a non-starter.
Crazy stuff. Yeah, non-starter, obviously.
Right. So in terms of what Coinless does, just really briefly, our primary business is running token sales, and so that means handling all the logistics from compliance to transaction processing to token distribution for a lot of the top sales, Filecoin, Blockstack, Algorand. We just ran the Nervos sale, Origin, a number of others. Super selective about who we work with. We vet them really thoroughly, and then and I'll talk about what that means. And then we work with the project. We offer a couple other services. We just launched Coinless Trade, which is our exchange, buying and selling crypto assets live 24/7. And really focused on capturing the interest in and demand for the up and coming crypto assets, the types of tokens that we're running sales for, then allowing those to be traded.
So like a secondary market before like the tokens are being released?
No, post release. So live tokens, live crypto exchange.
Well, it makes sense because these investors are already on your platform and they feel more comfortable doing it. But how do you kind of match the liquidity of like Binance or whatever?
Yeah, exactly. So we're really focused on working with projects like the ones that we are running token sales for. So when we run a token sale for a project, all of their investors are on our platform and the tokens get distributed through our platform. And so we really want to drive liquidity towards those assets. We're not off the bat trying to, capture the biggest chunk of Bitcoin trading or Ethereum trading. But rather focusing on those newer assets that we're actually running token sales for, where we already have the investors in the platform. We already have their trust and the tokens are being distributed through us.
Oh, interesting.
Yeah.
So you guys are managing, kind of the full through and through. How do you allow someone, how does someone get onboarded as an investor on the platform? They need to be accredited? What if projects don't allow? Do you do your own? Kind of walk me through not just the investor, but a project wants to come to you. How do they engage? What do you look for? How much money and your own effort and time do you put into doing the due diligence of these projects before you say even no?
Yeah. So first, briefly on the investor side, investors can sign up with nothing, and then they need to go through different processes depending on what they want to do. So for some token sales, you need to be accredited, in which case we would verify your accreditation status. In some cases, you need to be KYC'd, in which case we would, process your identity. So it just depends on a person-to-person basis or activity-to-activity basis what needs to be done there. On the project side, we like to meet with projects as early in their life cycle as possible so that we can get to know them and help them. Yeah. And, our view is that there are relatively few great projects in crypto. And we are absolutely willing and, in fact, want to spend as much time with them as possible to help offer advice, guide them, tell them about what we've seen from other offerings and what's been successful and what hasn't, and help them push towards a really successful token sale and beyond. And so, we invest a lot of time, a lot of energy, a lot of resources in these projects as we're meeting with them and trying to help them out. And then, the vetting process is important. And we, going back to your earlier question, there are absolutely some red flags that we look for. But candidly, I think most of the red flags are pretty easy to spot. And what's much more interesting to us is when you get down to these really tight decisions, a project that seems interesting, it has some good attributes, but Other things don't make as much sense. How do you make that decision?
I don't know. That's crazy.
That's the tough part for us. So we've, again, publicly worked with 8 projects in the last 2 years out of
only 8
publicly, out of 3,500 inbound, or more than that.
What are the common denominators of these projects?
So we
versus the 30.
We tend to evaluate these projects on 6 axes. One is team.
Hold on, I gotta get my notebook here.
Team, product, market, deal terms. So those are 4 things that you should evaluate, I think, with any startup if you're a savvy investor.
Can you repeat those really quick for the listeners?
Team, is the team strong? Are they going to be able to execute on this? Product, does the product they're building make sense? Is it actually a product that should exist in the world? Market, are they attacking a big market, or do we think a big market can be created that will allow this to be a massive result? And deal terms, does the price make sense? Do the deal terms make sense? Are they being sensible about how they're putting this thing together? And those are, I don't think those 4 items are specific to crypto investments. I think those are really any investment you think about making, especially startup investments.
Sure.
Those are important. But then there's 2 other aspects that we look at that I think are reasonably specific to crypto that are important to vet as a savvy investor. One is the legal structure. And if you look at more traditional startup fundraising, people don't really innovate on the legal structure for startup fundraising, or at least rarely. They put their standard terms, standard forms, and that's what people use. In crypto, people innovate wildly. And so you really have to make sure that you're comfortable with the legal structure that's being used around the token and kind of the regulatory status of it and all of that. And so that's one thing we look at really closely. And then the last one is really, I think, the most interesting one. And this is the one where the highest number of teams trip up that otherwise are really strong. And it's what we call token economics, which I know is a kind of term that's used in all sorts of different ways. But when we talk about it, we mean a couple things. One, if this product and network are successful, will value actually accrue to the token in the long run?
That's a very good question.
So we see a lot of projects where we look at it and we say, wow, this product makes a ton of sense. This network seems exciting. I understand the use case, but I'm just not convinced that if it is successful, the token will actually go up in value. Now, that doesn't mean they shouldn't build the product. They probably should build the product, but it does mean that investing in the token itself may not make as much sense. And so that's a really.
It may be better just to invest. I can't tell you how many tokens that I invested in that I almost wish I just bought equity in the company.
Exactly. Sometimes equity just makes more sense. So that's one piece of token economics. Will value accrue to the token if the network's successful? The other one is, are the incentives and the disincentives on the network properly calibrated? Do they make sense? So what do I mean by this? Without getting too in the weeds, token networks are about coordinating the actions of a distributed set of actors, of people. And because there's, by definition, no centralized party in a token network to dole out punishment or reward people, the incentives built into the network have to be sufficient to make sure that all of the important actors, so whether that's miners or users or developers, are properly incentivized to do the right thing, do what they need to do to make the network successful. And all the bad actors, people that might attack the network or try to exploit it, are properly disincentivized from doing so. And it's hard to attack the network.
Interesting.
And so evaluating, are these incentives properly calibrated, is really important, because if they aren't, it makes it very likely the network will not be successful. And again, you could have a super compelling product, decentralized product that makes a ton of sense, attacking a big market with a great team behind it. But if you look at the incentives and you feel like, okay, there's no way that miners are really going to be active on this network, or there's a huge exploit here where an attacker could attack for little penalty, that makes it a questionable investment as well. Because
what type of metrics for networks? What type of metrics work, or what type of things work to properly incentivize who you want to incentivize versus disincentivizing who you want to disincentivize? And I mean by things that work, like, for example, like staking on the network and offering an interest rate. That seems like an incentive for users to not put downward selling pressure? What type of other things do you see work and what just doesn't work?
Yeah, it's a really interesting question. I think, and I'll give you a more substantive answer, but the most immediate and true answer is we as an industry don't really know yet. We're so early that we have such limited data on these things. We have not seen a lot of these networks come under stress. Frankly, we haven't seen a lot of launch that we don't know yet. And one of the things that's so exciting to me about this industry is that it is very fertile ground for experimenting with incentives and governance models at a massive scale. 1,000 different tokens can be out there experimenting with 1,000 different incentivization mechanisms. And that is incredible. That's something that...
But how do you do that? You're right. And I'm a huge fan of throwing shit at the wall to see what sticks. But you know my story. I got in trouble. How do you do that? How do you experiment? Because I think it was the chief of FinCEN who said it the other day. She said, you can't invent a 190-mile-an-hour car and then say, I'm going to break the speed limit. How do you do that within the confines of a legal system that doesn't have any clarity on purpose? How do you do that?
I think it's really challenging. I think there's a number of answers there. One is, go to jurisdictions where there is clarity or there is flexibility, which a lot of teams are doing. I think another is be patient and wait for clarity to emerge. And that's something that a lot of teams are doing. And they're just kind of biding their time and waiting for a little bit more clarity. And another is, something that has happened historically, and I don't necessarily advocate for this, but it's something that's worked, is, launch in a permissionless way. And that's, what Bitcoin did. It's what Ethereum did. And those are our two best examples so far. So I agree with you that the legal and regulatory environment, the gray areas, are really challenging, make it really hard to run these experiments. But I'm optimistic that clarity will emerge over time and the industry will be able to continue forward, and we'll see these speed bumps as just that, as blips in the road that maybe slowed down progress a little bit, but did not halt it.
How do you actually live your life on crypto? How do you do it? I've been doing it since I first got started with Bitcoin back in 2011. But since 2016, I've been using the BitPay debit card to spend my Bitcoin on a day-to-day basis. And it's been such a great product that I've been using it for over 3 years. BitPay is now sponsoring Untold Stories, and they're going to be giving away free Visa debit cards to all my listeners. All you have to do is visit bitpay.com/Charlie. It's such an easy card to use. You get the card in the mail, you download the BitPay app, you put Bitcoin on the app, and when you want to send Bitcoin from the app into your debit card, it only takes a few seconds and you can spend your Bitcoin anywhere credit cards are offered. It's really so easy. You almost wonder, why didn't this come out in 2011 when Bitcoin first launched? Well, it was very difficult to do. In fact, I actually tried to launch my own debit card, but I wasn't able to, because the credit card companies were very reluctant to do it. But now BitPay launched their product, and a lot of other companies have launched credit cards and debit cards using Bitcoin over the years. I still will only use the BitPay card. I'm very loyal to the brands I like, and I hope you guys are too. The fees are very low. You can use it to withdraw cash at ATMs. You can use it all around the world with very, very low fees. A lot of companies have tacked on super high fees, and I don't like that. So check it out, bitpay.com/Charlie. That's bitpay.com/Charlie. You get a free card. You don't have to pay for it. Usually the card costs $10 or more. There's a commitment, but you don't have to do that here. It's a free card. There's literally no reason to not try it out. I've been using it for over 3 years. So check it out, and thanks for listening to Untold Stories. All right, so I hope you didn't skip my ad, because in the early part of the episode, we talked about how Bitpanda is working with us here at Untold Stories. Bitpanda is the leading European platform for investing in digital assets. I really like Bitpanda's approach. Why? I'll tell you why, so don't skip. Basically, what they're doing is to apply the same tech you're used to from Bitcoin to other digital assets. So, for example, you trade real precious metals like gold and silver on their platform 24/7 with ultra low fees. And What's really cool is that you can trade gold and silver and these other precious metals with other assets like Bitcoin, Ethereum, and other cryptos that they support. So in a nutshell, Bitpanda is advocating the tokenization topic. So they want to bring financial products like stocks, ETFs, and more to everybody who uses their platform anywhere in the world. So check them out, bitpanda.com. Support my sponsors. Have a great day. Over the years, I've learned a lot from crypto winters, a lot of the bull and bear markets, and there's a lot of things that I've learned. But one of the most important things that I've learned is that community is one of our strongest assets. It allows us to continue working together and talking to each other during the good times, the bad times, and hopefully not the ugly times. Over the past few months, I've been speaking with the Pepo team. These guys have spent years working with members of the crypto community and learning what we want in social sharing apps. And I'm really excited that Pepo is now one of the sponsors for Untold Stories. Even in the few weeks since they launched Pepo at DevCon, not that long ago, I've seen them make so many improvements, like hashtag search based on feedback from people using the app, and so many different features that combine the best parts of what we already love, that parts of Instagram, Facebook, Snapchat, but it combines it in a perfect way with such a nice user experience and good security. It combines them so perfectly that it looks like, and it actually was built for the crypto community. You could download the app by going to pepo.com/stories, and you can find me there at Charlie Shrem, the same as my Twitter handle. We've been seeing over the past month, EOS versus Kick versus Telegram. And we saw these are three huge companies, three huge projects that raised hundreds of millions of dollars for their projects. And they both kind of dealt with the SEC differently. So they all three dealt with the government very differently. Can you kind of talk about how differently they did it? Whereas like EOS said, this is what we did. We maybe made some mistakes, maybe we didn't, but we're going to settle with you and we're going to move forward. Where Kick and Telegram are almost like fighting. One of them settled. Like, do you think we're doing a good job nowadays? And I didn't say we because I'm not really in that industry, but do you think that your industry is doing a good job now dealing with regulators? Or there's sometimes where you wake up in the morning and you almost like kind of just put your hand on your head and say, why? Like, why would they do that?
I would say, I've definitely had those moments in that latter category, the why question. But at the same time, I think there are a variety of approaches here. There are aggressive approaches, there are passive approaches, there's a whole spectrum in between. And it seems worthwhile for different teams in different positions to be trying that. And I do think that the more teams that are having conversations with the SEC and other agencies, whether aggressively or more calmly, the more clear it is to those agencies that action is needed here, that these are not kind of isolated things where they're trying to set up rules for a single project. It's a whole industry and not a tiny one. And so I think that all of that, I can agree or disagree with the individual tactics that individual teams are using, but holistically, the fact that a lot of people are going out and really pushing on this and trying to get clarity, that's a good thing for the industry. And it'll happen.
That's a good outlook. That's a good outlook. What in your view, because you got involved around, you started this around the same time that a lot of the negativity was happening. But what happened? I mean, like in your view, how did the ICO market get such its bad name? What kind of happened? What were some of the bad things that people were doing? I mean, it was outright fraud. A lot of it was just outright fraud. People went to jail for this, which is good in that respect. But I mean, of course, I would never wish prison on anyone just because it's such a traumatic, life-changing, negative situation. But what happened?
I think a couple things happened to give ICOs a bad name. The biggest one was just like we were talking about earlier, the raw number of bad projects. And when I say bad projects, that encompasses a lot of things. It encompasses well-intentioned but poorly executed projects. It encompasses scammy and fraudulent projects. And there were, and still are a little bit, a lot of them. And people lost money on these. People saw them for what they really were. And when you have an industry where there's such a high number of bad things, it And I think this is reasonable. It starts to color the whole industry. It starts to make people think that everything is bad. And you couple that with the fact that the good projects are tackling really technically ambitious goals, and those take a while to build, means that really quickly you saw a bunch of these bad projects blow up, and you didn't see any examples of good projects succeeding because everyone was still heads down building. So if you look at, maybe the end of last year, the end of 2018, there was this uproar about token sales and this bad industry and these bad ICOs and the death of the ICO. Why did that happen? It happened because the boom happened at the end of 2017. And by the end of 2018, all the bad projects had blown up and lost people money and everyone was upset. And none of the good projects had actually shipped their product yet because they take a while to build when they're building something ambitious. And so that you combine those two factors, good projects not yet existing and bad projects or not yet shipping, and bad projects failing, and you get a really bad attitude about the industry.
Let's talk about legal structure for a second. So the first most well-known legal structure actually that was boasted about, that the inventor Stephen Naroff boasted for inventing it, and he's going through some legal troubles of his own right now. But the first kind of most well-known legal structure, and tell me if I'm wrong, was the Ethereum crowd sale and the ERC20 token, and he was the legal architect of that. How has the legal structure of these token sales changed, and what do you see most projects opting to use for their legal structure for issuing tokens and things like that?
Yeah, well, it's a wide field and a little bit hard to generalize, but I'll do my best here. I think what we're seeing is most projects, if they are not imminently launching, so they're raising money to sell tokens at some point in the future, when the network actually launches, they are structuring their offering as an offering of securities. And you might hear about the term SAFT or a bunch of other kind of similar structures, but the core idea is we're selling a security and it's regulated as a security. And that security works by you giving us investment capital now so we can go and build our project. And then at some point in the future when we launch, we will give you tokens proportionate to how much you invested. And that overarching structure, still, that was what was used a lot during 2017 during the boom. And it is still used today. So we see that a lot. We are increasingly seeing projects that are going live and having some functionality, launching and perhaps running a sale at the time of mainnet launch and selling it as a non-security. It's just, a product, basically, something that could be used for things. And a lot of teams are doing that only outside the US because they can't get comfortable doing so in the US. But it's a mixed field. And I think we'll see a lot of clarity starting to emerge on that side soon as these projects actually go live and we see what happens.
Tell me about the first time you heard about IEO, Initial Exchange Offering. What were your initial reactions and thoughts, and have they changed?
Well, my initial reaction was I get pretty not sick, but I get tired of everyone comparing ICOs to IPOs, and actually it's poorly named for that reason.
Yeah, it's a terrible. The term ICO is like the worst thing that we could have possibly have given ourselves,
right? Because
it's basically like just, hey, we need, it's all regulation. Right. It's like offering. The word offering is like regulatorily, if that is even a word, just a big no-no.
Right. And so, and even on top of that, most ICOs happen way before the token is actually live and liquid, right? So all these ICOs are raising money, or these token sales are raising money before they launch. And so it's still an illiquid asset. But the definition of an IPO is when an asset becomes liquid. And so there's always been this tension where, you go and talk to people outside the industry and they're like, oh, Coinless, you guys do ICOs. That's just like an IPO, right? And the answer is no, because most often these are illiquid assets for quite a while. But when I heard IEO for the first time, my first reaction was, oh, finally, this looks a whole lot more like an IPO. Because IEOs, if you think about it, if we put the terminology the other direction, what is an IPO, an initial public offering, except an IEO for a stock? An IPO is when a stock is initially offered on an exchange for the first time. And so that analogy works a lot better. So when I heard that term and heard the concept, I was excited because I realized, hey, this is actually what, this is much more analogous to an IPO than an ICO is. And so, I thought about that, and then it's been really interesting to see the evolution of IEOs over the last year or so, and where they fit into the ecosystem, which I think is totally separate from earlier token sales, which are the types of things that we usually work with. And I think what we'll see over time is this evolution where projects raise money in more traditional token sales early on to fund the development of the project. And then at some point, they do something like an IEO to actually put the network live and get it trading on exchanges.
So you think like the actual token, I mean, what are people actually buying sometimes on these things? I've seen some such creative things. It's like you're not buying a token, you're buying an option that if a token is issued down the road, you'll get this many tokens based on how much equity you own. Like I've seen some crazy, do regulators just kind of like blow over that and know that it's just a way for people to skirt around their own laws, or are they allowing these things to go through? Well, what are you seeing on the legal side of things?
Yeah, so I think, again, most often when we see those sorts of things, the teams are usually good about treating them like securities. They're not actually skirting around regulation. They're treating it like a security. The craziness in the structuring is largely to address issues. So, the whole option thing you were just talking about, what happens if you invest in a company, you invest in a SAFT that promises you tokens at some point in the future. And then maybe it's one of those projects that we were talking about earlier where the team's working and then they kind of realize, hold up, we don't need a token. We're building a good product, but there's no token necessary here. And so then they decide to not issue tokens. Are those SAFT investors screwed? Do they not have a right to anything because, the company was selling them future tokens?
That's a very good question. So what's the answer?
Well, so in some cases early on that has happened, but I think now what's happening is you're seeing more creative structures. This is kind of what you were getting at. They end up looking a little crazy, but it just feels necessary where the contract initially is for eventual tokens, or if tokens don't get issued, it will turn into equity instead. Or it's that you're buying equity, and at some point, if tokens get issued, you'll get a distribution of tokens as well. And so you get these funky structures, but it's really it's not trying to avoid regulation. In fact, these are generally treated properly as securities. It's much more about trying to avoid issues due to this kind of dual fundraising structure where people are raising with either tokens or equity, and you need to make sure investors are protected in either case.
The last question I had on this subject is going back to the access. You said, how do you transfer value from a company to the token? And if you want to use an example without creating saying the company's name, there are a lot of those now where like the company's profitable, but the token itself is doing shit. It's not moving at all because they never figured out they just thought people would speculate on the token forever.
It's a challenging question to answer. I believe that the best tokens, the true definition of what a token is, have nothing to do with the company. And that they may be created by a company, they may be created by people and launched, but the token exists in a wholly self-contained, decentralized ecosystem where there's the idea that there's a company tied to it doesn't even make any sense. Look at Bitcoin, right? There is no company tied to Bitcoin. Bitcoin is functional by itself. And that I think is critical for being a truly decentralized, true definition of a token.
Bitcoin became that because there was nowhere else for it to go. I mean, when Bitcoin launched, I guess the expectations of what it was and what it was going to be was very different. You know this. So, but with these tokens and these, the tokens and these other coins, there's kind of like an expectation of what we want it to be from the day it launches. So it's you can't really like grow organically that way.
Well, there's an expectation, but that expectation can be shifted. And I would hope that these tokens can be launched. They're launched by a company with some intentions, and perhaps the token grows and the network grows over time. And then the community decides, hey, these intentions are no longer what we want from this, and either are able to shift the direction of that token towards what the community wants, away from what the company wanted, or they fork the network and they go and build a new and better version that gets more adoption. And I think that's the way these networks have to work. If networks are being controlled by a company and their direction is being controlled by a company, then I do not think they're truly tokens. And I don't necessarily believe in the idea of for this definition of tokens for value being transmitted from a company to the token. I think that the value has to be totally within the token ecosystem.
Sidewire. Tell me about, you were in the Sanford Bitcoin group, and this was like the early days of Bitcoin, and then you graduated from school and you ended up starting a totally Bitcoin project, and that was actually in the political media space. So tell me about that, and also tell me, like, are there any things that you've brought over to Coinlist that you've learned from Sidewire?
Right. So this was in 2014, and a minor fact check. I unfortunately didn't actually graduate, so I left school a couple years in to go and start Sidewire.
Let me tell you a funny story. Most of us didn't graduate. Yeah, right. I did, but like I had to go back, and it was a whole because my dad was like, I wasted all that money. You better freaking graduate, or else I'm like invoicing you for all that money that I spent.
Yeah.
And I know that he would have done it, so I finished. I went back and finished, but I also got involved in Bitcoin in college, so I didn't. What's the point? In fact, you know Jeremy Gardner?
Yeah, of course.
So Jeremy actually was in college and sat with me in my apartment one day, and he's like, "Charlie, my name is Jeremy. You don't know me from a hole in the wall." This is pre his involvement, and he said, "I want to get involved in this Bitcoin thing. Should I leave school?" And I told him, "Stay in school. Don't get involved in Bitcoin now." This is 2014, and you know what he did? He fucking didn't listen to me. Left school. Ended up investing in like a ton of Bitcoin, founded Augur, very, very successful. So I'm actually happy that people don't listen to me sometimes. But going back to your story, so what happened?
Right. So, well, it's 2014. I was doing the Stanford Bitcoin group, and I think the obvious thing for me to do would have been something in crypto. But I had this problem, which was that I believed in crypto, but I couldn't tell. I thought it was a 50-50 coin flip whether or not there was going to be a single successful crypto asset, Bitcoin, or if there were going to be many. And any startup I could think about starting was predicated on one of those two assumptions. And I didn't want to add this total coin flip to what is already a low success rate for startups. I was looking at it and saying startups are likely to fail. I have this, anything I can think of relies on one of these two outcomes. I think those outcomes are a coin flip. I don't want to add another 50% to that failure rate. And so I said, all right, I'm gonna come back to crypto, but right now I'm gonna go and do something else. And so I did. So I had an amazing co-founder for Sidewire. And yeah, like you said, it was a platform for mostly political experts to chat publicly about the news of the day. So think kind of Twitter without the noise. Really interesting experience, built a bunch of traction among experts and had some great conversations. Ultimately, the product itself didn't really do what it needed to do for consumers. And so we wound it down at the end of 2017, right as I was getting started with Coinlist. But yeah, I absolutely took a lot of learnings over a lot of things on just the operational side, how to run a startup and build a team and all of that. But in terms of more specific things, I spent a lot of time in DC for
how was that?
Sidewire. It was really interesting. I was there during the 2016 election cycle, and it's a fascinating environment. And I'd like to think that I took away some learnings about how DC works and how to interface with elected officials and regulators that is super useful today as we've been talking about as we march through this regulated world of crypto.
Where do you see, I wasn't planning on asking this, but I might as well. I was having a conversation with a friend of mine right before the show, but I mean, where do you see our country? What do you see happening in 2020? Like, do you see us do you see us like splitting into this, like having the societal change as people in this country? I mean, some people like predict like civil wars, like crazy things. Where do you see us in a few years from now?
Yeah, well, I try to stay a little bit far away from political prognostications, but at a high level,
same thing, not politically, but more of like as a society.
Right.
I guess that was my question, because I'm also apolitical, and I think that you're involved in crypto. You probably should be somewhat apolitical, just because you're what you're doing is apolitical. It's not political. It is in its own way, but it is not involved. You shouldn't be involved in the administration of the day.
Right. It's not partisan. Yeah.
Yeah, exactly. That's what I was trying to say.
Yeah. So I do think that socially and societally, I think the trends that we have been seeing, this kind of division and increased partisanship and all of that, I think that's going to increase for a little while. And what happens in 2020 and beyond, I don't know about the specifics, but I do think we're going to see increased partisanship, increased divisiveness for a little while. I don't know how that resolves. And I really hope that it does cleanly. I'm not a believer in the Civil War theories or anything like that. But I do think that, when people get further and further apart from each other, that can absolutely create some painful processes in terms of getting out of it. So we will really see what happens in the next few years.
So what's next for Coinless? What's next for this sector of the crypto space going forward in that respect? How do you see us? Do we see more of these security token offerings? Do you think we'll go back to like an ICO, IEO thing, or is that kind of dead? Yeah.
Well, what's next for Coinless is a big focus on this Coinless trade exchange that we just launched, and trying to grow that and build a community around this trading. But what I think is next for the industry is, most importantly, a bunch of the projects that raised money in 2017 and early 2018, they're going to launch. And I think what happens there is going to really set the direction for the industry going forward. Seeing how these projects do that raised a lot of money or built a great team or built a great product, are they able to get adoption? Are they able to grow? And that will really set the tone going forward. And so I'm excited for what the coming months have to bring on that front. I don't think it is time yet for security tokens, for these kind of asset-backed tokens that we hear about. And I think that
really, what are those? I mean, like, what's the story?
Yeah, so the idea here is that you can take existing assets. Let's talk about maybe real estate. That's kind of a canonical example, and tokenize them and represent their ownership digitally on a blockchain, and allow for more liquid trading and programmability and access to these assets in a digital format. I think it's a really interesting concept, and I actually do believe that in the long run, it will be successful, and we'll see a lot of assets moving to on-chain ownership records and tradability. I think the challenge here is that right now there just isn't demand for that from the investor side. Crypto investors do not really want tokenized assets right now. Traditional investors do not really want tokenized assets right now. And so until there's significant investor demand for those sorts of things, I don't think we're going to see a big boom in those. At some point, yes, but today and probably for the next year or two, I'm not particularly bullish on the tokenized asset wave.
So what does it do? Just get down, build your project, and stay boring?
I think that's it. Build your project, stay boring, and grow adoption, right? And this is, I'm really excited about some of the things that are happening right now around gaming, even around DeFi at some level, that we're trying to build real, and when I say we, I mean an industry, trying to build real use cases for people to actually get excited about and use. And that is going to be critical for the industry moving forward. We can only spend so much time building for ourselves before we have to start building for others.
That's a very good quote that I should write down, but you're right. Like, to expand on that, we're building an industry for ourselves here, for our families, for our own jobs, for our livelihood. I mean, at the end of the day, we're not working in an industry and building our companies in an industry that has been around for so long. We're trailblazing our own industry here. So, I mean, there's a lot of pressure on that, because you are seen as the leader, Coinlist is seen right now as the angel list for this space. And so what you do, not to put undue pressure on you, but what you do really has a big effect on what happens in the industry. Do you think about that?
No, yeah. With great power, right, comes great responsibility. And
Spider-Man.
You know it. And so, we think about that all the time, that people look to us for advice and counsel, and we strive to give the very best advice we can. But we also know, and we always try and be honest about this, things are uncertain. And the industry is changing every single day. And so people should seek advice from as many experts as they can. They should listen to as many episodes of your podcast as they can. They should try and learn from people and put that together and build a perspective on how they should be operating. But yes, absolutely, we see a lot of responsibility that we have. We want to make sure we do the best we can and help serve the industry.
So we have a lot of listeners who probably want to work for potential projects that you're helping. We have potential executives at projects that may want your help. How do these projects contact you? What are some things that they should prepare in advance? Some of the things that you're looking for. They listened to the episode. They heard, all the different metrics that you're looking for in the axis. What's their next step? I mean, because that's what the show is about, really. So what's their next step for being able to work with you? Yeah,
well, anyone should always feel free to reach out to team@coinless.co, and we're super responsive on that. And we look at all those emails. Absolutely. If you're someone that wants to work for a project, reach out to us. These projects are always hiring, and we can always put you in touch with the right person there. And on the project side, reach out and we want to start a conversation with you. It's never too early. And we want to understand what you're trying to do and how you're trying to build it, and see if we can be helpful as you're going through that process. I hesitate to offer kind of a set of recommendations or asks, because everyone is at a different stage. Some people are just at the most nascent idea stage. Some people are gearing up for a token sale and have legal docs in order and have built all that out. But really, whatever it is that you have, come to us and show us, and let's talk about it, and we'll do our best to do our best.
Do you have an email newsletter? Do you host webinars or meetups for people to follow you?
Yeah, we do. We have an email newsletter. You can sign up if you sign up for a Coinlist account on coinlist.co. You'll get the newsletter. It comes out about every other week. It's got a great mix of stuff that we're working on, industry news, things you should know, job opportunities, all sorts of stuff. And we really want to make sure that the Coinless community stays strong and can be, at some level, a center of gravity for the industry and help guide things the right direction.
A cool idea for your back pocket, and you can give me credit if you want down the road. But I was thinking like that you're in a good position to create this like job marketplace for people, because you probably work with a lot of companies that are hiring, and you probably run across people that are looking for work. That could be a really good kind of sub thing for you, where you take a piece of the person's salary if you help them get a job. It could be a good revenue stream for you.
Yeah, that's a great idea. So we have a product called Coinless Build, where we help projects run online hackathons to build their developer community and get things built on top of their network. And we've worked with a ton of great teams. We were in a hackathon with 0x. We were in a hackathon with Dapper Labs and the Cheese Wizards team. We're in a hackathon with NewCypher. We were in one with Ethereum, Tezos, Stellar, Near Protocol. So we've done all these hackathons to connect developers to teams, and a lot of those have turned into hiring conversations or more collaborative conversations where the teams have funded those developers to go and keep building different products. And so that's something else we're really excited about, that we can try and facilitate those connections. You're absolutely right.
Excellent. Thank you so much for coming on the show. Coinless.com. There's a lot of information that everyone learned from this show. So thank you for giving us that data and that information. And I'm really pleased with the topics and the conversation that we had.
Awesome. Well, thanks for having me. I really appreciate it.
Hey, everyone. Thanks for listening. New episodes of Untold Stories are released every Tuesday and Thursday at 7 a.m. EST on untoldstories.com, Apple, Spotify, or wherever you get your podcast. Untold Stories is produced by Jason Yanowitz, Michael Ippolito, Reed Hannaford, and Riley Silbert of Blockworks Group. Our account executives are Gina DeFelice and Julie Muroff. Our content is written by Kathy Zolo, Ronnie Tishner, and Scott Offord. Special thanks to Wayne Dallaire from Jump Dog Audio Productions. And of course, I'm your host, Charlie Shrem. You can follow me on Twitter at Charlie Shrem to continue the conversation. Send me some messages, feedback, or anything you want to say. And remember, please give some love to my sponsors, and I'll see you next week. Remember, strength in numbers and information is power.